Welcome back. Now let's invite the management of Medicure. They reported a mixed set of Q3 numbers. The revenue growth was steady, but margins and profitability took a hit. Himanshu Baid, MD of Medicure, is now joining in. Himanshu, thank you very much for joining in. This is Rima here. Let's begin with margins. Your margins have contracted on a year-on-year basis. What led to that, and what is the guidance on margins? Was this a one-off? Do margins recover back again in Q4? Or, are lower margins going to be the new normal for the company?
Thank you. I think this was a one-off situation. We had almost 7 crores of labor code impact, new labor code impact, and around 9.5 crores of acquisition costs were absorbed in Q3. So barring that, I think if you look at standalone numbers, we did a bit of 26.8%. Of course, if we combine it on the whole consolidated basis, it was around 24.2 because the subsidiaries, the acquisitions we did, they've started kicking in. Of course, they operate at a lower EBITDA margin right now because we've just acquired these companies. But as we go along, I think they will also increase their margins. So I think this was a one-off quarter for at least on a consolidated basis, the net margin level. But in terms of gross margins, we have improved by actually 200-300 pips actually in the current quarter.
So margins should get back to 25-27%, and on the top line, you maintain the 15 to 16% growth guidance?
So if you see current quarter, we have done close to 15-16% growth, from the previous quarter. Then I think this quarter also will see a similar number. So as we told earlier, between H1 and H2, we will see a 20% growth because first few quarters were really down because of international revenue, but international revenue has started coming back. So I think we'll end the year between H1 and H2 with a 20% growth. But of course, next year looks more promising, definitely.
All right. Could you quantify more promising, Mr. Baid? Because this year is going to be obviously a lower than estimated growth. As you said, the first couple of quarters were rough. And it appears most of the growth has come in because of the acquisition. Now, given that the acquisition will be fully available for the entire of FY27, what kind of growth are you looking at if you break it up between the exports as well as the domestic market? Because there was some softness even in the domestic market.
So domestic market, if you see, Nigel, it has grown around 22.5%. If you look at the private market, which is almost 90% of our business. So, and government business, of course, we have started to, there was a deliberate attempt to make it slightly, lower because of the margin pressure there. So overall, we've grown 18%, close to 18% on the domestic business. But private business has grown, which is 90%, has grown around 22%. Hopefully, we'll end the year around, roughly overall growth in the domestic business close to 21-22%, but the private business will grow by around 25%. That is why I think that's the most important one for us. When you look at next year, yes, we have not guided fully, but I think next year we should grow back. The subsidies will start kicking in. Export business, of course, which was stalled a little bit in Europe and US. I think, of course, the trade deal is signed. So I think now we are back on track. Hopefully, the contracts which were stalled will come back very quickly. We are working on them. And Europe market seems to be looking better now, much better than before. So export business will show a growth of between 12 to 15%. That's what we see right now. But I think we'll quantify the numbers end of Q4. And domestic business should grow by over 25% next year.
All right. You have scaled down your dialysis machine sales. I think earlier you were looking at 500 to 550. That's around 450 odd.
Yeah.
Are you confident about meeting this revised guidance? And how do you see that trajectory move from year on in terms of number of machines? If you could tell us 27, 28 onwards. And also the renal business, that was a renal business. That's a smaller part of your business, but you were quite optimistic on growth out there. So what revenues this year, next year, and how do you see that shaping up?
So I'll talk about the renal business first. So I think the renal business has taken a small dip, and I think mainly because of dumping from Chinese companies. I've been talking constantly about it, and because of the FTAs, they have been using nearby countries like Malaysia, Thailand, Vietnam to dump products in India at zero duty. I think that is what is hurting the industry. Number one. Number two, on the machine side also we have a similar problem because some of those equipments are coming from those countries and with a zero duty. And that is also hurting, our manufacturing here. So currently, I think we should end the year with around 25 to 28% growth. 9 months, we have done close to around 25% growth, but we should end around 25 to 28% growth for the whole year. Next year also, we should see a similar growth. unless until there is a big change, in the duty structure or there's something intervention by the government, we don't see moving back to that 35-40% number.
Have you reached out to the government, sir, for some sort of protection against dumping by China on the renal products?
Yeah, we have reached out, and I think we are working on that. We have, raised that issue at different levels, the Commerce Ministry and with the Pharmaceutical Ministry.
And how much cheaper are the Chinese products versus, say, Poly Medicures?
See, let me tell you, I think the most bigger problem is they have been selling below the import price. And I think that's a bigger concern. That how could somebody sell a product in India below the import cost? And I think that is a concern we have raised with the government. And, probably, there's a transfer pricing issue. Maybe, they are trying to just capture the market by, by lowering dumping the pricing at much below the import cost. So I think that's a challenge we are facing. And hopefully, government is working on it. Hopefully, we'll see, something in next few months coming up.
Okay. And sir, on this India-US trade deal for medtech products, the tariff has been cut from 15 to 18%. If you could give perspective on the industry, what percentage is India's exports to the US from an industry point of view? How would it compare with, say, from a country like China? And then lay out the impact for Poly Medicure, because I think for you, US exports is still very small.
Right. So I think if you see from India's total export basket of $4 billion, US export was close to around $750 million. And mainly these are large equipments, probably larger companies are exporting some equipments back to US. Consumer export is still not very high. So, but I think with the trade deal signed, I think what I see is a major impact coming in the medtech industry, because many projects were stalled and we lost many opportunities to countries like Malaysia, Vietnam, and maybe Thailand, because they had lower tariffs compared to India. So no new projects were coming and most of the projects got stalled. So I think this is a very, very positive move even for us, because we have almost 10 to 15 products in pipeline, which were on the verge of, getting into the US market. So hopefully, we will, start working on them. And I think, the companies we were working with, they'll come back very quickly to us on that. And also we get more competitive with China for sure, in terms of like-to-like basis.
All right. So very quickly, you spend close to around 5% of your revenue for job work charges to a group company. Vitromet, some part of the street wants to understand this. What's the nature of these charges? Why can't you, is there a benefit basically? What are the margins of that company? If you could help us out with regard to this 5% that you're paying to a group company.
So I think, Nigel, if you see historically, we were paying higher, almost 10%. Now it's almost dropped to 5%. So that is one thing I want to call out. Yes, because these companies based in Rajasthan, Jaipur, so the labor costs are much lower compared to what we pay at our end in Faridabad and other parts, where we are manufacturing our products. So this helps us to lower the cost. Vitromet, operates at around maybe net margin of around 5 to 6%.
So you're saying net by doing it from an in-house, from a group company, it's actually beneficial to the company. Would that be fair?
Absolutely.
Okay. All right. We take that on board, Mr. Baid. For the time being, the stock has come off drastically from the top, but you're saying FY26 had its fair share of challenges. FY27 looks more promising. We look forward to chatting up with you soon. Wishing you all the best for Q4 and FY27 as well.